Okay, so what kind of situation do we currently have in the gold market? Now, what we can see is that the market has just created this huge impulse to the upside that has created all-time highs. So breaking above the high that the market had created in 2011. Now that the market has created a huge impulse breaking all-time highs, what can we expect? We can expect a retracement. Now, if we are to determine the first level at which we expect a retracement, what do we have to do? As usual, if we want information on a retracement, what do we have to do? We have to take our Fibonacci on the impulse. And by taking our Fibonacci on the impulse, we can see that we have our first target at the 0.382, which is lining up perfectly with this structure that we have here from a monthly perspective. In fact, we had previous resistance, and again resistance, now turned support at this area from a monthly point of view. So we have an overall monthly take profit at this level, which is the first Fibonacci level on the monthly, lining up also with quite good structure, previous resistance, now turned support. So let's take our monthly target. Now, if we are to go down on the weekly time frame and look at the situation that we have on the weekly, as well on the weekly time frame, we consider the market has created this huge impulse to the upside also in the weekly, without giving us any sign of our retracement. So also in the weekly, if we want informations on the first level at which we expect the market to actually give us a retracement, we have to take our Fibonacci from the low to the high of the impulse. And what we can see is that we have our first target at the 0.382 of the Fibonacci taken on the impulse, which will be as well our weekly target to the downside. And if we go down on the daily, what we can see? Now on the daily time frame, we can see that we have a very similar situation of what we have on the monthly and weekly. We have just one difference. In fact, on the daily time frame, we can see that clearly the market has created a quite strong impulse to the upside without giving us any sign of a retracement. And as well, also here, if we want informations on the move to the downside, we have to take our Fibonacci also on the daily impulse, and we have a first target at the 0.32, which will give us basically our daily target to the downside. So we already have our daily, weekly, and daily and monthly targets. So to where we will bring the market. Now we first expect a move to the daily and then to the weekly. Now there is one very important thing that I want to show you. In fact, if we take our Fibonacci on the daily impulse as we have just seen, we have a very, very, very interesting thing to put in mind. The weekly target is lining up perfectly with the daily 0.618, meaning that the 0.382 of the weekly time frame is lining up perfectly with the 0.618 of the daily time frame, creating a confluence of Fibonacci levels, which usually acts as a magnet for the price, and we definitely expect the market to drop to this level to go and grab some liquidity. So definitely the confluence, this is the strongest of the targets. Just something that I wanted to show you. Now, in creating this move to the upside, the market created one red candle, one candle that is not related to the move, which is the structure, okay? And this level, which was the resistance that the market was facing, now has been broken to the upside with this green candle, and the market already retested it with this green candle and got rejected to the upside. So at the moment, this box is support. This candle here is support, is demand for this market. And we cannot be looking for any shorts until the market will remain above this area from a daily perspective. So only if the market will break below it, then things will start getting interesting, because until the market will remain above this area, the market can and should continue to the upside because we have daily support at its zone. Now, before I show you how we will be approaching this situation with students, let's go and give a quick check at what we have from a COT perspective. So what the biggest banks and institutions are currently doing in the gold market. Now, if we check what the hedge funds have been doing, we can see that clearly they have been adding a lot of longs. In fact, a gold has been making this huge move to the upside. However, we can see that with the last report, they closed 21K long positions. This is a massive, massive, massive amount of longs getting closed. And if institutions close such a high number of longs, you can definitely expect a deeper retracement and some profit taking, specifically because they also already added 7.9K shorts, and net positions clearly decreased from 266K to 236K. So we can expect a retracement. However, as usual, trading is not predictive. Trading is reactive. So only if gold will break below this structure, only then all this support that we have here will be turned resistance at this area. So if it will remain above, we're not interested because the market can easily continue to the upside. But if we will break below, then on the retest of this level, with students, what we will be doing? We will be monitoring price action on the 4-hour time frame inside of this area, waiting for the market to provide to us one of our valid entries. And if the market will provide to us one of our valid entries, then we will be taking a nice short with a very good risk to reward and very good probabilities for the market to give us a move to the downside, first to the daily target and then to the weekly and possibly the monthly targets. But the weekly, it is the strongest target. So this is overall what we have on gold. If you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you. With students, we will be looking inside of this area for potential shorts, and I will see you in the next video.